Good morning, everyone. Welcome to the 2021 grain situation and outlook. My name is Pat Hatzenbuehler. I'm Extension Specialist for Crops Economics and an Assistant Professor at the University of Idaho, based in Twin Falls. It's my pleasure to welcome you to this, all those who are watching live and those who will be watching later on YouTube. And I would like to acknowledge my colleagues, Xiaoshui Rita Du and Liang Jimmy Liu, for their assistance with the filming of this presentation. So let's get started. So the outline for today is to talk about the main grains that are grown in Idaho: wheat, barley, and corn. We'll talk about the global situation for wheat and corn, and then the U.S. situation for all three crops, Idaho situation for all three crops, and then for each of the crops, look at the supply conditions, stocks-to-use ratios, which I'll define in just a minute, and then current and forecasted prices to see how those are looking, or we expect to look in the next year. Before we get into the data for how things are looking for the outlook, just want to do a quick definition of the stocks-to-use ratio. So this is a common term and a figure that economists use to measure market tightness, or how much supply is available on the market. And so essentially it's a ratio of how much grain that from the previous year that's carried and available for use in the next year. And then use is this comprehensive term that encompasses the different types of demand, whether for food or feed or seed and other things. In the domestic sense, we think of exports as encompassed in that, but for the global thing, since trade balances, exports aren't encompassed. But essentially, it's all the types of demand are in the denominator. And this is a relative term, so a lower stocks-to-use ratio implies tighter markets, and a higher stocks-to-use ratio implies more abundant markets, and you compare from year to year this ratio. And so we'll get into the data, and I'll explain how that works in a couple slides. So let's start with wheat. On the left side, I have a panel of basically just global supply from 2005 and projected through 2022. These are all USDA WASDE report numbers, and so essentially I just want to show that the global supply of wheat has been increasing since 2005, but in recent years hasn't been increasing and decreased, projected from 2021 into next year. And so with this relatively stagnant supply in the past couple of years, with use or demand either staying constant or increasing, what happens with stagnant supply is you could get a stocks-to-use ratio that starts to decrease. And that's what we're seeing on the right side of the panel, in which I have these ratios that I just explained, which are ending stocks relative to use on the global markets. And so the decline from 2020 to 2021 was 0.4 to 0.37, and they're projecting another decline into the next year. So that means globally wheat markets are getting tighter. In the U.S., we get somewhat similar story, especially with the stocks-to-use ratio, but the supply is especially a bit different in the sense that supply is actually declining from 2020 to 2021, and also from 2021 to 2022. And so we get these bigger effects with regard to the stocks-to-use ratio for the U.S. market than on the global market, because the supply is lower, whereas demand is either staying constant or increasing, either due to population increase, increase in income, other things that can impact the demand. And so that means projected 2022 much tighter U.S. wheat markets than they were in 2021. For Idaho, we're a contributor of this decline in supply of what's available in the U.S. Largely, we had this severe drought in the growing season, especially in northern Idaho, but throughout the state. And so the supply conditions for irrigated were not quite as bad, but essentially what they're projecting for this current growing season is a substantial reduction in production. And the new graph that I have on the right side of this panel is wheat yields for Idaho since 2005, which is the black line, and the gray line is the trend yields over time. The green line which corresponds with the left axis, is the deviation between the actual yields and the trend yields. And so you just to see for 2007, the black line is below the gray line, and so you get this green line deviation of 7 bushels per acre below the trend. And now you look at 2021, the estimate is far below the trend of close to 90 bushels per acre, and we have an estimate near 65 bushels, it's 67 bushels per acre. So the deviation is close to 20 bushels per acre lower, which is unheard of over the past 16 years. And so that is largely explains this large reduction in production for this current year. So with regard to prices, with these lower stocks-to-use ratios and lower production overall, USDA is projecting marketing year average prices that are higher in 2022 relative to 2021. So that's, with lower supply, constant or increasing demand, that implies higher prices. So what I've done here on this graph is essentially tried to identify years that are consistent with regard to this change in stocks-to-use ratio from one year to the next. And so from 2007, for example, to 2008, there's a similar change than we're observing or projecting to observe from 2021 to 2022. Similarly, with the change from 2010 to 2011, and from this past year, 2020 to 2021. And so those kind of years, this change in the stocks-to-use ratio implies a similar change with regard to this abundance or tightness of the wheat market. And so I plotted the prices for those years in which this change is similar to observe to give an idea of what we might expect for the 2022 year moving forward. And so that what we see, and essentially I want to focus especially on the 2011 year, which is the green line for the prices, because that one is a change that's similar as levels of stock-to-use relative to these past year. And in each case, we see somewhat increasing prices in the beginning part of the year, and then toward April, May, when we get an idea of how much acreage is going to be devoted to wheat, then we get some downside risk for the prices. But based on these trends and these years that seemingly have similar supply and use conditions, we expect likely that there may be increasing prices through the winter and winter months, but then some downside risk that we get more information for the next crop year about what acreage looks like. So let's move on to barley. We have more information on the U.S. barley, so we don't talk about the what's happening on global conditions. But this is a different story from wheat in the sense of U.S. supply has been decreasing over this entire observation period from 2005 through projected 2022, with a big decrease from 2021 to 2022. Stocks-to-use ratios are different than wheat also in the sense of we have a reduction of supply from 2021 to 2022, but increase in the stocks-to-use ratio. That implies that even though supply is reducing and stocks are likely to be lower, use is reducing also, so people are substituting away from barley just because there's less available and using other types of grains for food and feed and other uses. This is the situation in Idaho, similar with wheat, with the summer growing season drought had a big impact on barley as well as wheat, and so there was a substantial reduction in barley production between the 2020 and 2021 years, and the deviations are similar as observed. So the black line represents the actual yields, the gray line is the trend yields, and then the brown line, which corresponds with the left axis, are the deviations from the trend. And so for this 2021 year in which we have yields, a trend of over 100 bushels per acre and observed yields near 90, that represents a deviation of roughly 12 bushels per acre from the trend. And so just like with wheat, but to a lesser degree, barley yields are much lower for the current year than they've been for the entire observation period. Similar to what I did with wheat is I have these stocks-to-use ratios again, and then try to identify these years in which these changes in the stocks-to-use ratio are similar to the as projected for the next year. So same kind of thing, and then I plotted the prices for those years for which we observe the changes, and want to focus especially on this 2013 to 2014 year because the levels are somewhat similar to what we're observing to this year, which is the brown line on the price graph. So in that year, prices increased into the new year, but then started to decrease as well, although these are much more fluctuation in the barley prices than there were in the wheat, so we're not quite as confident that the prices would be increasing for the winter months. But if they are conditions like they are in 2013, then there may be a couple more months in which prices rise, which would be consistent with the increase projected for the WASD from 4.75 a bushel to 5.15 a bushel. A couple more months of increasing prices, and then once more information comes out with regard to acreage for barley, then the prices have much more risk for downward movement. So move on to corn, which is the last grain to analyze, and we'll look at global markets for corn. So very much increase in global supply of corn since 2005, especially a big jump 2016 to 2017. Since then, the increase has not been as substantial, and especially in the past few years, since 2019, 2020, 2021, basically stagnant or declining. And so when we have that situation of stagnant or declining supply of corn on the global markets, with increasing or stagnant demand of wheat or demand for corn, then that implies stocks-to-use ratios that are declining or staying constant. So that's what we see on the right panel with lower stocks-to-use ratios on the global markets since 2017, and I mean since 2016, since the big jump in supply. And so that means tighter global corn markets continuing through next year. For U.S. supply has also been increasing in the U.S., but we see this similar type of dynamic of increasing supply since 2016, but then relatively stagnant or declining supply for corn since then. But these dynamics are much bigger for corn in the sense of increasing use causes even bigger changes in the stock-to-use ratios. So for 2021, estimated 8% or 0.08 of a stocks-to-use ratio, which is lowest that we've observed since 2012 for the corn market in the U.S. A little bit of a rebound is projected for next year, or into the 2022 year, which means U.S. corn markets are tighter now than is expected to be next year, which implies USDA is projecting an increase in production of corn for this next year. With regard to Idaho, been growing more corn as the dairy industry has increased, and it's a good user of manure, other reasons to grow corn. So the Idaho corn supply trend is somewhat similar to the U.S. and global markets, but with more fluctuations as would due to crop rotations and other things. But with the graph on the right side with the prices, again, I have the black line representing actual yields and the trend line being gray, and then the deviations from trend. Interestingly, with corn relative to the other crops, because corn is more irrigated, grown in the Magic Valley, where I'm based here in Twin Falls, there are much lower fluctuations with regard to the trend yields. And that's one of the benefits of having irrigated crops, is you have these deviations that are smaller. Big corn yields higher than trend for 2021, over 200, and positive deviation for the trend, at least in the Idaho case. So we're a bit of a deviator in that regard. With regard to prices, WASDE is projecting higher prices for corn, almost $1 higher for 2022 relative to 2021. But again, like I did for the other crops, is try to look at these similar years that had these changes in the stocks to use ratio that is projected for 2021 to 2022 to get an idea of what we might expect for 2022. And so it's especially want to focus on this year 2013 to 2014, which is the gray line on the price graph. But all of them are kind of interesting in the sense of through January to April somewhat show a positive patterns. We expect likely maybe that corn prices will be increasing. So if you're a feed buyer, that would imply buying your feed as early as possible. If you're a seller of corn, maybe holding over and selling a bit over the next few months. But toward April and May is when we get more downside risk. Once we get a better idea of how much corn will be grown throughout the U.S., and then especially in the summer, if the yield information is looking good, then there's especially downside risk opportunity for that. So these are just patterns would expect, maybe likely expect increasing prices moving into the first few months of 2022. So what to summarize, basically for the next 2021-2022 year, supply for wheat on the global and U.S. markets is expected to be lower than it was in 2020 to 2021. With barley, U.S. is also expected to be lower. With corn, we're expected to be actually increasing, and so a bit different trend for corn relative to the other crops. Stocks to use ratios for wheat are projected to be tighter on the global markets and the U.S. markets. Not quite as tight for barley or corn. So corn is projected to be similarly tight on global markets and a little bit less tight global markets in the 2021-22 year. All marketing year average prices are increased from the last crop year, 2020 to 2021, and largely that is due to these recent increase in prices over the past few months. The early part of the 2021 crop year, I have observed substantial increases in prices, and those will likely increase based on my projections over the past few slides over the next few months. But once more information, especially April, May, once we get some idea what people's area planted decisions will be, then there's substantial more downside risk, but also maybe some upside risk if there's some surprises for lower acreage. And so that implies likely, sell now over the next few months, but then maybe just keep a little bit if you want to see if your projection is correct, whether you want to see if there might be some upside risk moving forward. So the key factors that can change this are, like I mentioned, planted area decisions are going to be fundamental to changing these price dynamics. Once you get more information, it'll be really interesting this year to see how much of each crop is grown, especially with very much higher nutrient cost. Fertilizer prices are essentially through the roof, and so how producers respond, planting crops that don't need as much nutrients, so moving perhaps from wheat to more barley or other types of crops that aren't quite as nutrient, so we'll just have to wait to see. Foreign growing conditions are especially important for markets moving forward through big export competitors, Australia, the EU, Russia, Ukraine, but also big producers and sometimes substantial importers of corn, such as China. And China trade will have a big impact, likely on changing these dynamics. So if imports continue to be strong, which the USDA is projecting them to be, so the 2021-2022 imports from China are projected to be the same or similar as they were for 2019 and to 2020 year, and which were much larger than the 2019 to 2020 year. And so they're if those continue to be large, then that provides support for prices. But if there's a change in those flows, then there is some downside risk to prices. Another thing that could weigh on prices to the downside is that the dollar has been very strong since December 2020, and it continues to be strong. And so in that sense, exports are more expensive, and so countries may be less willing to buy at certain times. And so those are things that may cause the price increases to either not be as strong or to reverse toward the negative. So those are my projections and discussion of current situation for grains on global markets, U.S. markets, and Idaho conditions. And I'm happy to take any questions and receive any comments. Thank you very much for your attention.